Here to help us break down the numbers, Truist's Youssef Squali. He's got a buy rating, just raised his price target to 225. It had been 220. Youssef, just give me a quick take on the quarter here. Obviously, it was a bit of a surprise, perhaps, for how well cloud did in terms of year over year and growth there and profitability. But search wasn't bad either, was it?
No, it wasn't. And thank you for having me again on. So I would say the good news is the outperformance was really broad-based. It was in search. The way we think about it is roughly a quarter of the beat was from cloud, a quarter was from search, and half actually was from other, like YouTube subscription and some of the new hardware sales, et cetera. And importantly, their margin continued to improve. So, this is at a time where we're continuing to see greater engagement. Some of these new search platforms like ChatGPT and Perplexity, et cetera. But what needs to be noted here is, one, Google, even in that environment, we believe, continues to gain search of monetizable searches. And two, they're fighting a really good fight, and they're actually changing their narrative a little bit. They're becoming a lot more aggressive. They're becoming, the way I think about it, the gloves are off. Back in November of 2022, they were thought of as having been caught flat-footed. Now they're leaning in very aggressively, and they're showing the numbers for it.
Yeah, on generative AI. You also say, I believe, it's still a bit early to properly gauge the return on investment from various investments, but green shoots you've seen in search. What does that mean, green shoots?
So a number of things. One, the fear was that Gen AI driven searches were going to be cannibalistic to traditional search. The numbers don't support that. In fact, they're additive. That's number one. Number two, they're actually and this is something that the CFO shared last night, and that is the monetization, or the CPMs, or the CPCs, excuse me, on these AI driven searches are actually similar to the pricing that they've been getting from their traditional search. And lastly, this is a nugget that they shared with us, which was really impressive, and that is roughly 25% of all code written at Google is now AI driven, which kind of tells you that not only is there a revenue opportunity, but there's also a dramatic cost advantage that could be had over time as AI permeates all of their products internally and externally.
I think, if I heard you correctly, maybe it was ancillary to that was Sundar's comment that a quarter of code is now being generated by AI. I wonder how high you think that number gets.
That's exactly what I'm talking about. So can it get to 50% over the next year or two? I think it can. And the cost advantages of that will be material, considering the tens of thousands of programmers and coders that they have.
Finally, CapEx, I think they $13 billion last quarter. They're going to keep it roughly where it is. Was that expected? A bit of a surprise? What do your numbers look like for next year?
It was expected. What they've said is it's going to be 12 to 13 billion coming into Q3, and that was in line with what they did in Q1 and Q2. They said that it's going to be the same for Q4. They qualitatively said that in 2025, it's going to be up a little bit, but not as much as in 2024, which is kind of an easy one because in 2024, CapEx was up 60%, 60. So our base case is that CapEx was going to grow somewhere in the mid-teens. We're a little higher than consensus. We're at 58 billion. I think consensus is at 54. There could be a surprise there, but I would say on the back of the results they just put up last night, I think they have a longer leash right now with investors. In other words, they can spend more, and investors won't be as unhappy about it.